All right, how's it going, everybody? Welcome back to another stock market outlook video brought to you by DFU. This is my daily driver for screening, charting, stock analysis, and a whole lot more. And if you're interested in DFU and haven't checked it out just yet, we actually just added a cool new set of data points. If I open up the data panel, where you can now look at the institutional fund ownership over the past few quarters, the growth, and also we did also add guidance data from companies themselves. So these are really important data points that can help you determine, what the longer term prospects of a stock is. Is it under accumulation? Is it under distribution? Is the stock likely to have a significant uptrend in the future? These are cool data points that we just added to DFU. Again, if you want to check that out, you can click the link down below in the description, as well as popping up right now. There's a lot to get into today. Obviously, the market has been in a correction really since this day right here, where we broke lower after a double top formation. Then we continued lower through the 21 EMA, 50 SMA. That's when really things started falling apart off the top. We saw PLTR, a former leader, breakdown, and now we're a few weeks into this correction below the 200 SMA, and we're just kind of waiting for at least the initial wave of selling to subside. Right now, we're at this key level here, just below the 200 SMA. We've undercut this prior base low. If we zoom out, you can see this is an area where there could be a lot of volume support in this area. So this is kind of the key area that I'm watching to see, do we put in some type of important swing low? It doesn't have to be the low of the correction, but, is there a tradable area that then will lead to a rally, test those declining moving averages, and either start a new uptrend or maybe start another wave of selling down. But we'll have to wait and see. But what's important here on Friday is we did have a positive end to the week. A lot of the week was pretty negative. We had a potential bottom form here, or a short-term tradable bottom here, but we had a negative expectation breaker here on Thursday where we gap lower, tried to rally, and then close right near lows, breaking the expectations that we'd fall through up from this day. And now this day right here is again a potential tradable bottom like we had on this bar as well as on this bar. But we remain below declining 10 EMA, 21 EMA, 50 SMA, and now the 200 SMA as well. So things right now are in a short-term downtrend. We're potentially stretched to the downside a little bit and potentially will have a tradable rally back to the upside. But for now, for most position traders, investors, less is more. If you're an active swing trader or aggressive day trader, you can try to trade this volatility and look for those intraday moves and maybe multi-day moves. But for most participants, this type of action is not conducive to at least trades to the long side. If you're shorting, there's definitely be a lot of opportunities off the 10 EMA, rallies, as well as off the top here. But for the most part, my style is just to kind of sit back in cash, wait for the next opportunities and next leadership to develop so we can trade kind of the next significant uptrend like we've had and will always have coming out of significant corrections. And I think that's an important thing to remember, that with this significant correction will come a great trading opportunity. It might not be, Monday, it might not be the next week even, but there will be amazing rallies, market leadership taking off, doubling, tripling, and more. And actually, the worse that this gets, the more of a reset we have in the market. I think better in the long term, because there's going to be even better opportunities. When things get stretched to the downside, things rally even harder and faster. And that's kind of what we're looking for in terms of potential trades. Actually, before we get any further, I want to pause right here and just ask you guys in the comments right now, let me know how much cash you're holding, what's kind of the percentage of your account, and give me your take on the market. I want to hear your thoughts, and I'll respond to all of you. Basically, I'll make that claim right now. I'll respond to all of you. So let me know down below what your thoughts are on the market, how much cash you're holding currently, and I'd be interested to hear your guys' takes as well. With that said, let's go on over to now the SPY. This looks very similar to the QQQ. Again, big upside reversal today off the 200-day moving average, just undercutting this support and low. So potentially a key spot coming into support, undercutting and rallying, where we could have a counter trend rally, but rallies into the 21 EMA and the 10 EMA will be suspect. And we really have to form a tradable bottom, set some higher lows, and really build out this correction base before we can have a sustained uptrend. And that's what we're kind of looking for now. Whenever we get into a correction mindset, when it comes to the market or individual stocks as well, we're looking for extensions down, undercutting key support levels, basically an expansion move back up, higher lows to form, and then form higher highs and higher lows along the way. That's the definition of uptrend, and that's what we're really looking for to wait for a sustained rally to the upside. Looking at IWO and IWM, this is kind of what small caps are doing. This just looks a lot worse. We're below all the moving averages significantly. We've been in a downtrend for quite some time, really since this action right here. Big sell bars, and just in general, mega caps and larger caps are holding up better than the market. But we've been in a downtrend for quite some time. Really, when we were chopping around with the QQQ and SPY, this was more just pulling back pretty hard. And now we're potentially extended to the downside again below the short-term moving averages, putting an upside reversal bar, but it's 1 day of strength in the context of a longer-term downtrend. So we have yet to have a change in character. If we go down here, I've got deep view net new highs, new lows, as well as just stocks above the 40 SMA on the NYSE. So two kind of breadth indicators, and we can see net new lows, breadth declining, and they're yet to be kind of reach peak levels here. We'll have to see what happens. I know AAII, a lot of people have been watching that, and that's gone to an extreme. But all of that is really secondary. What price action is really doing, and as of this moment, we're still well below all these declining moving averages, and need to see follow through and higher highs and higher lows to really say, all right, that's potentially a tradable bottom. Let's put on some risk. And additionally, in addition to what the indexes are doing, what we need to see is the formation and development of new market leadership. We'll take a look at a bunch of stocks recently, but the key leaders of last time, PLTR, Nvidia, Reddit, they just don't look the same. Reddit just broke down today. So we need to see new leaders kind of step up. We're starting to see some, glimpses of RS, and in my TradeLab articles, I've been noting stocks that, are bucking the trend and setting up well. Biotech's been strong, miners have been strong, insurance stocks have been really strong, but, those aren't really kind of key themes that are usually conducive to strong momentum moves in the market. So we have to see kind of new leadership step up, whether that's past leaders that are reinvigorated and just are building bases right now and set back up, or is there an entire new kind of theme that takes over from AI semis that really leads the way forward? We have yet to see kind of that happen. So we'll have to see what happens and see that as well. There's what the indexes are doing, and then there is what the individual stocks are doing. And the leaders lead both the market and the individual stocks. So we'll have to see when those really appear and look to start significant uptrends. Looking at IBIT as well is another kind of great gauge of risk appetite. And right now, we've got this potential topping formation. We're below the moving averages. We were rejected down from the declining 21 EMA on this day, as well as these 2 days, and not a negative day, even though the market was pretty strong in general. This undercut these lows, and we'll have to see how this forms up next week. We could, if we have a strong day early next week, set this as a higher low if we get a positive expectation breaker, gap up, and break through that 21 EMA. But as of right now, we are in a daily down cycle. And this is something to look out for on the Qs and SPY as we rally into those moving averages. Do we see downside reversals? Do we see rejections from those levels, suggesting that there's more selling? And that would just kind of be a counter trend rally that then, reconfirms the downside and, breaks those lows. So we'll have to see what happens both with IBIT as well as the Qs and SPY. Looking at the mega caps is a great gauge of risk appetite as well. Nvidia really has been in a stage 3, potentially stage 4 for quite some time. We do have a nice upside reversal today, but we had, a nice upside reversal this day and this day. So, this doesn't mean much unless we get follow through, higher highs and higher lows, breaking above the moving averages. And right now this looks like a choppy mess. Maybe we just need, a new earnings cycle to form, some new product that they launch, some new news end factor to reinvigorate this trend and restart stage 2. But right now this looks more like a stage 3, potentially transitioning into a stage 4 to my eyes. But again, let me know what your thoughts are down below in the comment section. Apple, this is again just kind of chopping around for basically since the middle of 2024. We haven't really made much progress, and this kind of gives me a little bit of 2021 vibes with the mega caps just kind of basing out. But this is right near the moving averages, a little bit stronger than Nvidia, but lower high compared to this high. So we'll have to see what happens. Big upside reversal bars and good action today, but again, testing those key moving averages. So it'll be interesting early next week to see how these act. Google below the 200 SMA, again, hasn't really made progress since the middle of 2024. We've got a gap down here to deal with. And again, just a strong downtrend, counter trend back into the 200 SMA. If you're a short artist, this might be a place to reinvigorate your short after you sold into strength down here. After we broke down on this day right here, that would be kind of the ideal point, or this day right here as we gap down, consolidated for one day, broke lower. And by the way, if you want me to make a video on short setups, let me know down below in the comment section. I'm happy to do that. It's not my forte, but I've interviewed a bunch of people and can provide some good, risk management and key setups. Basically, you kind of play the same setups as we do in an upcycle, just the downside, and the moves are faster, more volatile. That's what makes shorting a little bit more difficult. But the key principles are still the same, and there's a lot of potential here for shorts after leaders have topped and we start down cycles. Tesla, this is an interesting one. We've now filled this gap that was created by the election. And let me get rid of this anchored VWAP here. There we go. We've now filled this gap here that was caused by the election, but we're still in a significant downtrend. We're below all the key moving averages, below the 200 SMA as well. And, to me, this just looks like, again, very similar to this day that eventually got undercut. So we have to seek follow through, higher highs and higher lows for this to build out. This would take some time. And right now, there's no changing character present, and we'll just have to see and wait and see what happens. Meta, this looks one of the stronger of the mega caps, a big upside reversal today. Again, potentially a reversal extension at a base low, but we still need to form higher highs and higher lows and really set up something. But, this is in a really nice, strong uptrend, but that broke with this downside reversal that undercut all these lows at once, and that really invigorated and started this daily downtrend. Amazon, another one with that's at a key level here, the 200 SMA. We'll see if we get a bounce, and then we'll see how it acts against the declining moving averages here. But again, it hasn't really made progress since July of 2024. Lastly, we've got Microsoft just in a downtrend. We can see based on stage analysis, this is actually in a stage 4 right now. And this definitely has the look of a stage 3 top here. And we'll have to see kind of what happens and to see if we can, make a turn here and reclaim those short-term moving averages. So all in all, looking at the indexes, looking at mega caps, things are still under distribution. They're in downtrends, and maybe there'll be counter trend rallies, but there is a rally attempt that's valid and currently active based on today's action, but we need to see follow through. We need to see higher lows. Until that happens, less is more for most type of traders. And really, we just want to be avoiding as much as possible a lot of the chop, because even if this is the low, it might not be the best risk reward area. And what I mean by that is even if this is the low and you caught it in here perfectly, there's going to be a lot of chop as it works through overhead supply, makes its way through the moving averages, and a spot later on after it forms a higher low, everything tightens. That might be a spot where you can put on a lot more size with lower risk because things are tighter and are more conducive to upside moves. So that's one reason why you might want to wait for the EMA crossback, the wedge pop, the reclaims of the moving averages. There's a lot of ways to play a cycle. And for me, my best spot is after we've bottomed and shown strength, pushed off low significantly, formed at least one higher low, built a range against the moving averages, are retesting the 21 EMA after breaking through it. That's kind of my sweet spot and when I really like to get involved. So, even if this is the bottom, don't feel like you need to rush in and get in early because there'll be plenty of time before we break these highs, even if this is the low. So be patient and remember that risk management and also, your headspace is so important. And if you just get chopped up here, you're not going to be in the right frame of mind to really take advantage of the uptrend that comes after this, because you might be worn out by getting a lot of mini stop hits and not really ready both mentally and financially to take advantage of that new uptrend. So that's just a few quick words on the downtrend. Moving on to leading areas of the market. Here are my performance charts here in Deep View. I've got the daily action here on the left, percent change from the open of these key thematic ETFs. Blockchain was the strongest here. Energy was strong as well. And then here on the right, I've got the leading themes over the past 20 days. So we've got China technology, iDrive, IAC, GLD, so miners up here, a lot of these. So, really not many themes that I like to trade, and this is just a good way to get a sense of overall rotation. What's leading will always be here on the top right, and what's acting well on a daily basis and could, start to lead will be over here on the left near the top. So this is a really nice setup, and if you've got Deep View, definitely recommend setting something up like this. With that said, let's go ahead and cover a few key names. And I want to start with Reddit. And let's bring up a daily chart. So here we've got Reddit, of course. We broke the 21 EMA back in this area, 2 closes below the 21 EMA. That's my main sell signal back in this area. After a really nice trend, this was my best trade of the year back from this area, a few entries all the way up until this prior base. And then we broke out and now pulled back below the 21 EMA and now are breaking lower below the shelf that we had been forming. And this is a key point. When we're in a correction, even stocks that seem to be holding up well, and this was showing RS during this period versus the market, even if they're showing RS, doesn't mean they can't get taken to the woodshed the very next day, where we broke this range and then had a further, it looks like 11% decline here today on this Friday. So, during a correction, we want to be monitoring RS, but relative strength actually kind of matters most after we put in a tradable bottom reversal extension and have seen a nice expansion up. During this period, which is maybe the first third to first half of a correction, stocks might hold up well on one day and give it all back the next day. They might hold it up another day and then give it all back. And what we're really looking for is persistent relative strength, meaning not just one day of RS, one day where we're acting well, holding key levels, but sustained relative strength and really strong relative strength, especially in the latter half of a correction, moving up the right-hand side of the base. So, just be aware that this can happen. There was also NTNX, I think it was. This is holding up well above this base pivot. I was watching this, and then this day right here just breaks down completely, down 7%, and it fall through lower, even though it did rally off the 50 SMA here today. But this is just another example that, even stocks that are holding up well and, are showing relative strength can really suffer, very significant declines during a market correction. So don't get too married to a stock. Don't be too, aggressive getting into things. There's going to be a lot of time once there's more clarity, once we start moving out the right-hand side of bases, once leadership and leadership groups start developing. So just, one key thing that I definitely did want to mention. Looking at PLTR, I want to bring up this chart as well. This kind of looks similar to Reddit, a few days ago, 2 days ago, where we're pulling back into a key level. We're showing a little bit of relative strength. We're holding this when the market is falling through to the downside, but this could easily break these lows and test the 200 SMA if this truly has topped. But, if today was the low, what we'd expect here is for this to continue to hold up well and then pop through the 21 EMA and restart uptrend, build out this base, form higher highs and higher lows. So we don't have to predict. We just kind of have to wait and see what happens and wait for more clarity, both from the market as well as the market leadership, because this will often lead a few days ahead of what the market's actually going to do. So if this manages to break up through the moving averages and then, forms higher lows above them, that would be constructive and a sign that, hey, the market's getting a little bit more positive, and start looking for more signs that the market is strengthening, more earnings gaps holding, more stocks reclaiming moving averages, breadth improving, net new highs improving, all of that. So definitely watch the leaders and see how they're acting, and just keep an eye out for new and developing leadership. And speaking of that, I do want to cover a few stocks that I'm watching pretty carefully. Uber holding above the 21 EMA really nicely. It's within this range here. A nice oops reversal today and watching for fall throughs to the upside. This is part of a bigger base here, which could be a stage 3 or just a significant basing phase in the stock. We'll have to see how it resolves. But overall, this is in an RS phase. Nice move up here that held the 21 EMA, and anything holding above the key moving averages when the market is below is a name to keep an eye on and a name that's showing relative strength. Another name I want to focus on here is Okta. This is part of a big weekly base here. It had a nice move back in this area in 2020. Then we went into a stage 4 decline. And this is an example of how destructive a stage 4 decline can be. It was down about 80%. And then really since then, since the fall of 2022, we've been in a stage 1. And there's a great example of stage analysis here. And we've been basing, have tried to push out, was pushed back down. And recently we had another earnings gap, and we can see a nice earnings surprise here and the potential for finally a move above this key level. We'll see if this can actually start a new stage 2 uptrend, but this is definitely a name that's holding up well. Today, you can see it held up above this key level here, and basically watching to see how it holds versus this level and see if it can build out and then restart uptrend and form, a tradable range versus this area. But definitely a name to have on your radar as well in the more kind of growth type area. So definitely a name to have on your radar. Otherwise, what's really been showing relative strength is the biotech space, the pharma space, Guild, LLY. These have been acting well, although today LLY broke down. So again, stuff that shows RS can break down the next day. Just got to be aware of that. What else has been showing a lot of relative strength? The miners have, insurance has, and LMND and Root are two names in the insurance space, which kind of have the characteristics of a growth type stock that's tradable. They've got high ADRs and have the potential to make nice moves, as you can see from here. And this has been basing, and it's a pretty deep base, about 45%. If you want to go down here, about 50%, but it's built out nicely and is kind of consolidating, forming a tighter range within the context of this longer term base. And so this is one I'm keeping an eye on. Can we pop higher and restart an uptrend? We'll have to see. Root has been holding up really well, right near highs, but a little bit volatile here, but holding up okay, holding the 21 EMA. So this in the insurance space has been acting well, and this has had some nice moves. This is actually a nice episodic pivot back in this area. And actually, this actually reminds me, I do want to mention that for those of you who are interested, we're doing a masterclass with Pradeep Bande, who is the founder, developer of the episodic pivot setup, which, Christian Kwalamagi made famous. Basically how you trade catalysts and strong moves from catalysts. They can be earnings reports, news catalysts, game-changing news for a company, that N factor and can slim. So if you're interested, check out the link down below. High recommend it. I'm really looking forward to this and learning how to improve how I trade these EPs and earnings gaps. Pradeep is fantastic at trading them, managing risk when he does so, and sizing enough that it really makes a difference in your account when they do go ahead and work. So I'm looking forward to learning his full process, and I've been working with him closely over the past few months, developing this, and it's going to be fantastic. So if you haven't yet, Early Bird is now available, and you can check out the link down in the description to learn more there. But Rue is a nice example from an EP right here, game-changing catalyst on big volume, and really recently it's been holding up really nicely versus the market. Some other names I'm watching, but aren't quite as strong. We've got TEM, which is pulling back, watching to see how this base forms. What other names do I want to focus on? Let me go ahead and take a look here. Bros, this one had an upside reversal, potentially the bottom of a base. We'll see if it can fall through to the upside. Let's see here. ASTS setting up here. LNTH, LNTH, I first started noticing near the 200-day moving average. It's basically gained about 12% since then, so that's acting well. Jenny, this is a new name. I think this is a biotech as well, or I forget exactly what this name is, but setting up within a base. ARCT, another biotech acting well. ACMR in the semi space is holding up well, forming a tight range the past few days. This one acting well. DE, really nice action, reclaiming the 21 EMA yesterday and following through today. MP and miners have been acting well. This is consolidating right near this prior base pivot. WGS looks similar to Uber. INOD pulling back to this downward trend line, and we'll see if we can reclaim the 21 EMA. Uber, Excel, another biotech, LMND, and I think that's pretty much it. So all in all, going through my screens yesterday and this weekend, there's not much out there, and that's another sign that, hey, the market might need a lot more time to really develop things. But that being said, you want to keep doing your homework every weekend, every day, so you're ready and start to notice things when they start changing. And it's amazing how 1 or 2 really good days can completely change the look of charts and bases and all of that. And that's why it's so important to, build a relative strength list every day, keep tabs on potential leadership that's developing, so you're ready and have that step ahead of everybody else who, is checked out or, just, doing other things, focusing on other things, as the first leadership is getting ready to break out. That's how you notice a Zoom before everybody else. That's how you notice, a Tesla before anyone else. That's really your edge in finding the next leader that can double, triple, or even more in the next uptrend, is doing the homework now, and regularly screening, looking for new leadership, looking for bases develop, and trying to find those changing characters and try to find the stocks that are holding up the best during market corrections. Again, relative strength I think is most important in the second half of a correction, when we've maybe put in a tradable bottom or a significant bottom and now we're just forming higher highs and higher lows. That's when those leaders really stand out on down days. They'll completely ignore what the market is doing, and that's what you really want to key in on. But overall, I think that's pretty much what I wanted to cover today. Going back to the QQQ, just to close things off, potentially day one of a rally, but we need to see follow through. We need to see how it acts versus the declining moving averages. And if we have downside reversals against those, or if we start to, fall through to the upside, higher highs and higher lows, that would be kind of what we're waiting for to get aggressive again for swing and position trades. But right now, there's no rush. We're still in a downtrend. We're still forming lower highs and lower lows. We're still below all the moving averages. We're still below the 200-day moving average. All those indicators are saying, hey, less is more right now. We're in a downtrend. If you're not shorting, probably your best bet is, to go fishing, or, just keep tabs on the market every day after the close and see if there's any kind of key changes in character. But that's kind of my piece. Hopefully you found this helpful. Sorry if I talked a little bit too much, but again, let me know your thoughts down below. I'd love to hear kind of what you guys are thinking about the market. And if there's any stocks that, are showing up, showing relative strength and are acting well that I haven't covered, let me know down below in the comment section. I'd be curious to see what you guys are watching. And, we can work together to try to find the next great leaders, the next Reddit, the next A-Lab, the next NVIDIA, Tesla, PLTR, all those names. They started their major runs from significant corrections. So again, this is an extreme positive. Once we get out of this, there's going to be tremendous opportunities to take advantage of, and there's no rush to get there. The setups will be clear and proliferating when everything's ready to go. So thanks so much for watching. If you did like this, please go ahead and leave a like down below. Subscribe if you're new to the channel, and I'll see you guys in future videos. Take care.